Hey. Good. Great. So, are you able to hear me in the back okay? I'm going to let the audio guys do how much wood could a woodchuck chuck if a woodchuck could chuck wood? All right. My name is Paulie Vanchiere, and nice to see everybody. I am with the Pediatric Management Institute, and I appreciate you taking the time to join me today to talk about budgeting. So, just so I can get a feel for the room, how many of you do some type of budget every year? Okay, all right. We're going to talk about a budget and the different components. We're going to talk about why budgets are important. And really the most important thing is that it gives us an opportunity to tell a story. That to me is the main takeaway of a budget. What do we think is going to happen over a period of time, and what is the financial consequence of that? With that, it can be a straightforward process, and it can be overly complicated. Do we need to... See if we can get this. 1, 2. All right. One of the things that people who know me know that I'm not going to spend a whole lot of time overcomplicating things. And if there's a really simple way to do it, that's the way. Try this. All right, we'll try this again. So, today, the agenda, we're going to talk about a few housekeeping items, the information that you're going to need. See if that helps a little bit. All right. So, we're going to look at the information that you need. We're going to look at some data, and we're really going to walk through the tangibles of many different things. But one of the things that you need to be very careful of is the obsessiveness with detail. Too many times, people get to the point of diminishing return, which is, if I spend another hour, am I necessarily seeing a better quality output? And so I caution you that don't let OCD get in the way of a budget, okay? And so it's just one of those things that I like people to keep in mind. Budgeting is not a perfect science, and it shouldn't be treated like a perfect science. And it's okay to say, that's good enough, okay? But we're going to let math drive this as much as we possibly can. So there are 4 places of information to help you prepare the budget. There is a balance sheet. There's a profit and loss statement. Some people call it income statement. There's a statement of retained earnings and statement of cash flow. Statement of retained earnings we're really not going to talk about today. That has more to do with equity. It's probably a day-long course in and of itself. Statement of cash flow becomes only important if you're using what's called an accrual basis of accounting. So you have cash basis and accrual basis, and we'll talk about it in a minute. But really, we're going to focus on the profit and loss report or the income statement. I use those interchangeably. So the income statement lists revenue and all my expenses. The statement of cash flows is really the change in cash on hand. And again, without going too far into accrual versus cash basis, I'm going to say that 99% of you are on a cash basis of accounting. Does that sound familiar to a handful? Okay. The statement of retained earnings is related to your equity, and then the balance sheet is what you owe versus what you own. So this is a very simplified version of a profit and loss report. We have our revenue, we have our expenses, and then we have the net income. This is as simple as it comes. And on any given week, I can look at a dozen different ways of looking at this, but this is really the core of what the income, the P&L or the income statement looks like. Now, there are many different ways at which you can allocate your expenses. So you have your rent, You have your vaccine expenses. There are many different ways that people will attribute those expenses on the book. But sometimes they'll say, do we want the rent to show up under rent as an expense? Are we going to allocate it to individual providers, measuring provider productivity or profitability? These are some allocation methods that people look at and how they allocate those expenses across the practice. But the foundation of all the financial is what's called a chart of accounts. Has anyone ever heard of chart of accounts? Okay. So what this tells us, what this helps us to do is each of these line items on the profit and loss report is a different item on the profit and loss, on the chart of accounts. And this is the basis of the information. And the more granular you can get on this, the easier it is to do some things. But we're not going to overcomplicate it today. The chart of accounts is simply a series of buckets. So I get an invoice from Sanofi, and I am going to classify it as a vaccine expense. Everyone following along with that? That vaccine is a bucket on the chart of accounts. And it helps us to organize where the expenses, the revenue and the expenses and different types of financial information are coming from. It helps us to organize all of the revenue coming in into categories, and it also helps us with the categories of the expenses going out. And generally, the chart of accounts are broken up into 5 main components. We have the asset, the liability, the equity, the income, and expenses. Now, where we really want to focus our attention on is, this is all theoretical at this point. So let's look at some practical examples. Generally speaking, we're going to have different types of expenses in different ranges of numbers. So all of our income, generally speaking, start with the number 4,000. Then we have different types of expenses, and there's no steadfast rule to what numbers cover what type of expenses, but this is one that I've used for many years. I have several accountants who also use the same method, but generally speaking, underneath the different categories, the first number indicates whether or not it's a balance sheet item or a revenue or an expense item. So let's look into a little bit more detail. So for revenue, many practices, and I've seen some of the financials of individuals here, it just says income. And what I like to do is break it out a little bit more. How much income did I bring from credit card? How much was being paid through Payment Pro versus what was mailed in from the patient? Versus how much was automatic transfer of funds from the insurance company? What this allows me to do is if I can bring a little bit of granularity, it becomes helpful because then I can look over time, are we bringing in more revenue from patient, paying by check, over the phone, Usually where this becomes helpful is where people complain about the credit card processing fees. And what I can do, because I have it granular, I got a phone call and they were all upset because their credit card transaction fees had gone up 15%. And so I pulled it up and I said, oh yeah, but if you look at this, 4011, that has also gone up by the same percentage. So I expected to see an increase in credit card transaction cost. So this helps you to make those decisions. The other thing it helps is within the categorization of your capitated payment. How many of you take capitated payments of some shape? Or PCM per member, some type of per member per month. A lot of people do not post those types of transactions in PCC. So the money comes in and it just simply goes into QuickBooks or whatever. So we want to be able to look and see, are those different types of payment, are they remaining steady, or are they going up or going down? So this is a system by which you can really use to help identify this and track things. For payroll expenses, I like to break things up into several categories. The high level, provider versus non-provider. whether you're an owner or an employed physician or an employed nurse practitioner, that is treated separately than my staff. So I have my administrator, I have my billing crew, I've got my receptionist, I've got the clinical support, which is your RNs and LPNs and MAs, and I want to be able to track break out the payroll expense by functional area within the practice. Because if my revenue is going up, am I seeing an increase in the cost in various areas within the practice? And so this becomes really helpful because over time, because I've categorized it, I can really track and see, are my clinical staff expenses going up, are my billing expenses going up, and so forth. This is done, those allocations are done on a monthly or per payroll period. So if this week you're running payroll, and the payroll is $100,000, your bookkeeper or someone on your team is going to say, well, 10,000 of that was for billing staff, 5,000 of that was for this, and they will break out that categorization. So it takes a little bit, but once you get on a roll, it helps you to be able to decipher where you may be seeing some increases in expenses and so forth. So here, we also break out utilities by water, electricity. This is, really consistent so that we can look at those expenses and be able to track them over time. Marketing expense, we can look at that and how much you're spending on the website versus Facebook ads if you're doing those types of things. The more granularity you have, the easier it is to monitor and put together that budget so you can get an idea on how much you're going to be spending. The same thing with medical supplies. I can say probably half the people that are here this week, they probably lump in their vaccine and their laboratory and their medical supplies all in one line item. If you're one of those people, you may consider breaking it out so that we can track those individual line items so you can quickly see how much did I spend on medical supplies versus the vaccine versus lab supplies. So this becomes particularly helpful. And then within the provider expenses. Now, this is going to be non-partner, non-extender. These are employed physicians on the 8,000, okay? And so what we have is, we have their, how much their base salary is, how much we spent on benefits, and how much we spent on bonus, and all these types of things. And then on the right-hand side, we have our extenders. So again, we want to be able to track, are we spending more money on the providers over time, or are we spending more money on their benefit costs and so forth? This becomes helpful as you put together that budget, which we're going to walk through in just a minute. And then for the partners or the owners within the practice, very similar. It allows me to break out, okay, we paid Dr. Sauer this much in a base salary, this is how much we paid for his benefit, and this is how much we paid for his bonuses. And so if you don't begin to track it or categorize things, it makes it really hard. You'll start lumping things together as you try to put together the budget. This is the chart of account that I just walked through. And so if you want to download it, you're welcome to. This will bring you to the page. It's the Excel spreadsheet, and it has all the GL numbers we just went through and all the different categories. You're welcome to it. Now, departments and classes. How many of you have more than one location? Okay. So sometimes you can look at your expenses and say, how much did we spend in rent for this one location? And in which case, we're going to use what are called departments. Each location is a different department. And then we're also going to categorize things by individual partners or providers. For example, how much did you spend on CME? We're also going to do an additional categorization of a class. Dr. Smith, who worked at location 1, we have a CME expense. We'll do a couple of categorizations. That is very helpful as you're putting together your budget. At the end of the day, the two biggest expenses are labor and vaccine. Anyone disagree with that? Everyone agrees? Yes? All right. So let's look at this. The labor cost allocation, which we kind of walked through, As you're preparing a budget, it's really important to understand the different areas. How much are we going to spend on clinical staff versus the billing staff? When you're putting together a budget, it is forcing you to tell a story and what you think is going to happen. And this is really helpful to break it down by functional area within your practice to get an idea of how much you may or may not be spending. As a side note, this is a reference that I put in here. If you're paying someone $20 an hour to work in your practice, $20 an hour, let's just say 2,000 hours a year, 20 times 2,000 is $40,000. Am I spending $40,000 or more? I'm spending more, right? And why am I spending more? Because I have all these payroll taxes. I have insurance, I have benefits and other things. So this is something to keep in mind as you're putting together your budget, that it's more than just the hourly rate. It's all the other benefits and the PTO and everything that comes with it that you need to keep in mind as you work through and think about your labor costs. There's only 3 things you need for a budget. Really simple. Boy, this thing is really, let's see. It's got a happy trigger on it. There's really only 3 things that you need for your budget. You need your revenue per encounter. You need to know how many encounters a day, and then how many days a week, how many days a year your providers are going to work. Okay? Really straightforward. This is really on the budgeting side, on the revenue side. So, really simple, revenue per encounter. You have your total revenue of $500,000. We have 4,000 visits. The revenue per encounter is $125. Pretty straightforward, really simple. This is not rocket science, I assure you. It's just, for some of us, we just kind of got to know what the steps are to get through there. Number of encounters per day. We saw 4,000 visits. We worked 200 days in the year. We're coming in at 20 encounters per day. So first 2 items, easy peasy, really simple. Next is revenue per encounter. We're going to spend about 5 or 10 minutes beating this dead horse, just so you really understand, because this is the biggest variability when I'm putting together a budget, okay? And if you can understand the basis of how you came up with the numbers, it'll help you to be more comfortable that the budget you come up with is appropriate and reliable. So what we're going to do is we're going to look over a 12-month period of time, by provider, how many visits did they see, and how much revenue did they generate. I asked Tim Proctor a few minutes ago before we started. He said there are some reports that will break out in PCC that are by provider, your revenue per encounter. If you can't find it, he says, just let us know. This is Tim speaking. Let us know and we'll point you in that direction. So that being said, we want to make a little grid and look at how many patients they saw, the revenue, and their revenue per encounter, because with this information, we're going to start plugging it into the budget. With the revenue per encounter, one of the things that we want to be able to do is look at it over a 12-month period of time because of seasonality, which we'll get into. But the revenue per encounter is really going to help us, and we're going to look at it by individual month. And it becomes really helpful because if I have a doctor, a provider in the practice, all of a sudden, and I'm tracking it month to month, which everyone should be doing, and I notice it drops off, could it be a credentialing issue? Anyone ever heard of an insurance company screwing up their credentialing? Yeah. All right. It could be something simple as that. It could be that the provider needs some more training on their coding. Something happened. How many of you heard an insurance company taking 99214 and paying you a 99213? That sound familiar? Yeah. Those dirty gremlins. Yeah. So tracking revenue per encounter helps you to identify some issues if you're tracking it on a monthly basis. But that's just a little side note. So the other thing I want to talk about, and this is where we're going to beat the dead horse, because I've still got 30 minutes, but the revenue per encounter is really important. And this is, we're going to get in our Wayback Machine. We're going to go back to the year 1 BC, which is 2019, 1 year before COVID, okay? Back in 2019, Chip was nice enough to share some data with me. They looked at 2 million appointments in 2019 from almost 600 practices. And here we can see in the first part of the year, this was the average, this was the normal distribution of revenue per encounter across the whole year. But it varies wildly by season. So in the first half of the year, January, February, March, we have more volume with a lower revenue per encounter because of what kind of visit? Sick visits, right? And then at the end of the year, November, December, we see that increase in sick visits. And then right there in the middle, we can see that we have our checkup season right here in the middle, right? We have fewer visits, but a much higher revenue per encounter. This all makes sense. Now, we'll say that in the last 3 years, this predictable pattern has totally disappeared, right? 2022, we saw 2 sick seasons, one at the beginning of the year and one October, November. 2023, we saw 1. This year, we didn't see a significant first quarter. How many of you saw a reduction in the number of sick visits in January, February of this year? Right? Everybody is scrambling to catch up on their year-to-date numbers. That's just what's happening. But the reason we want to look at revenue per encounter for the purposes of budgeting is to recognize that there's a 15% increase in the revenue per encounter from the fall or the beginning of the year to the middle, and then it comes back down. So taking 10 minutes to explain something that should only take 30 seconds, this really illustrates why when we're doing a budget, you may consider doing month by month how many visits a provider will do and what that revenue per encounter is for the month, but you at least want to look at an entire year to get a sense of revenue per encounter. So we saw the up, we saw it come down right after the thing, and that's where it becomes helpful to see. So there's also, this is looking at the revenue per encounter, and this is looking at the number of encounters. So in this particular data set, we saw that revenue per encounter come up and then go back down, consistent with the other data. So I'm going to get off that. The third thing that we need when preparing a budget is how many days you're going to work during the year. Now, there are some providers where I say, look, you know, you work 4 days a week. I assume you're going to work 50 weeks a year. 4 times 50 is 200. That's pretty good. But the reality is they don't work. Rarely does anyone work 200 days in a year. Because you got vacations, you got sick time, you got CME, and so forth. There's one person that I remember, I said, hey, usually I do this in November. Hey, I'm doing the budget for next year. How many days do you think you're going to work? She pulls out a calendar and starts counting by month how many days she thinks she's going to work. But really, this is really the last component in helping you to anticipate the revenue that you're going to use to plug in for your budget. The other thing you need to think about is how you're going to handle, and the biggest wild card is your flu vaccine. So in August, most of you will get your flu vaccines, right? Then in November, and you'll get it, and when is it usually due? End of October, 1st of November? And then how many of you put it on a credit card? Yeah. So you end up using your cash maybe at the end of December, 1st of January. Is that a familiar story to everybody? Yeah, all right. So you need to be mindful as you're planning your budget that the expense, even though we received it in August, and we didn't pay the credit card until the end of December, it may be a November expense because we record the expense when we put it on the credit card, not when we paid the credit card off. Does that sound familiar? So you need to keep that in mind as you're thinking about cash flow. How many of you provide bonuses to your providers? Yeah. So is it an annual bonus, a productivity bonus? You need to be anticipating that. One little thing that this is your first tip that I'll give you today. If you use if you use credit card to pay for your vaccines, how many of you have reward for your credit card? Okay. A lot of times people use the airline miles and the Mickey points and the Disney points and so forth. What I have found is that you find yourself a good credit card that offers a cash rebate between 1.5% and 2%. I use that to fund employee year-end bonuses. It may not cover the whole thing, but at least brings me in a little bit of cash that I can pay Christmas bonuses for the employees. Just something to think about. I'm not a big fan of the points. I'd rather work with cash, but it's just something to think about as you're paying for your invoices. But you got to manage the cash flow to when the cash is going to be leaving the pastor. So let's make a budget. This is really it. You're going to estimate your revenue. You're going to estimate your operating cost, your provider cost. You're going to plan for any capital expenses if you're moving into a new location or you're buying new IT equipment and so forth. And then you're going to review it. And it's really a 5-step process. This spreadsheet, and I'll show you where the QR code is to download it, is very simple. We have providers 1, 2, 3. How many encounters they're going to see per month, and what their revenue per encounter is. This is detailed. You know, we're looking at that information, we're looking at it month to month, and anticipating how much revenue each provider is going to generate, and then we're also going to look at quality payments, capitation payments. If you're on a capitation payment, how many covered lives, what is the rate, how much revenue are you going to bring in? And at the bottom right, we expect that over the course of a year, we're going to generate almost $2.2 million. This is the revenue projection, really straightforward. Now we look at our operating expenses. We're looking at the salary, and then we start looking at the individual expenses. So what I normally do is, in November I'm running it. How many of you use QuickBooks? Great product. No, works well. I've seen a group of over 250 pediatricians in 30-plus locations use QuickBooks. It works well. It's a great product. So what I'll do is I'll run a profit and loss by month for the last 12 months, and I'll make some estimates and say, yeah, okay, we've been paying on average $300 a month for this particular expense, and that's what I'm going to plug in. My utilities, my electric bill, if I'm here in Denver, it may go up in the summer, it may come down in the winter. You know, if you want to get detailed, you can, but don't let perfection be the enemy here, okay? We're going to plug in these numbers, we're going to estimate these expenses, and this is the QR code. I'll show it again in a few minutes, where you can download this exact spreadsheet. But here we can see what our total expenses are by simply adding in what we think those expenses are. So we expect about $1.5 million in expenses. We can also expect that we're going to see a bump in the vaccines when we pay for the flu vaccines at the end of the year. We have a little bump in the summer, but it's going to be a little lighter. You know the pattern. You know when those vaccine expenses come in, because you know your business, but you're also looking at the last 12 months, and it becomes helpful. And then provider expenses. Provider expenses you really need to keep a close eye on. We're going to look at their base pay, we're going to look at their benefit costs, and then also for the owners. And we see how much we're spending on providers. So in this scenario, we're going to spend $600,000 for the nurse practitioners, employed physicians, and the partners within the practice, and it gives us a number. This summary sheet, capital expenses, what you plan to spend on the year. If you're thinking about moving to a new location or adding a new location or adding some new expense, it becomes helpful because on the summary sheet, we can see we're going to bring in around $2 million in revenue. We have these expenses. We're left with $57,000. Now, I can play with the spreadsheet and say, what if? What if I hire 2 nurse practitioners instead of 1 physician? I go back and I edit it, and then I come back and say, what is the financial implication of that budget? I can assure you this is not rocket science. It's just having the discipline and the understanding to know what do we want to think about, because this is telling a story. The story I have on my mind of what I'm going to spend and how much revenue I'm going to generate tells me how much money I have left over at the end of the year. And it's really the only way to anticipate what you're going to do over the next year. So here's the QR code. You can download this exact spreadsheet, and I hope you find it helpful. And they're all linked up, right? As you tweak the revenue and the number of providers, it will then show you how much you have left at the end of the day. So, how many of you would like to have money left over at the end of the year? All right. So oftentimes when we're helping practices with their planning, we do help practices to figure out, okay, how are we going to split what's left over? So what I wanted to kind of review with you today is 5 different ways that some practices will split whatever money is left over. So there's a practice out in Long Island. They probably do $15 million a year in revenue. They have 5 partners, and one of those partners was spending a month in Florida every year, but they still, whatever is left over was an even split, regardless of productivity. On the other extreme, you have what's called an eat what you kill model. We look at those expense allocations and we say, look, you consumed 55 units of Prevnar, so we're going to quote unquote charge you for those 55 units of Prevnar and so forth. Very detailed. And then you sort of have some things in the middle, right? We're going to sort of say, okay, we're going to take 25% of what's left over, split evenly, the net 75% based on productivity. This is another whole conversation, but I just wanted to put it out there because this becomes helpful when you're putting your budget together. Because if you have a significant amount of money left over, before you get too far down past the budget, that people want to know, okay, based on this budget, how much am I going to get? These are some things to think about and how you plug into those numbers. The spreadsheet I gave you gets us all the way to that number here, how much is left to be split. I didn't go to the next step because there's so much variability. The single biggest determinant as to where your practice sits on this spectrum is your culture, okay? But you can look at it. So this is really one of my favorite ways. This one is actually one that my father had in his practice, and it worked for them, okay? So we had $650,000 left over at the end of the year for the partners to split, and so we basically did 25% even split, 75% based on charges, or RVU, or payment, whatever way it's in. But this was one system that I really like, and so here we can see that they did 25% even split, 75% based on productivity, how much they earned for the year, how much was already drawn, how much is due, right? This is about as simple as you can get. To me, I prefer this, personally, over a very heavy cost allocation, eat what you can kill. This is more of a marriage where you're sharing some risk and sharing some expenses. Just some things to think about. So real quick in QuickBooks, I want to show you some functionality. How many of you have QuickBooks Online? How many of you have QuickBooks Desktop? All right, next summer, I hope that everybody is on QuickBooks Online, okay? There's no financial thing. It is different, but the flexibility that you get is just remarkable. Because on my phone, I can dial in, I can pull up the information from many practices, and it allows the physician to be able to see exactly what's going on. And it's just so much easier. You don't have to worry about backups and things like that. But within QuickBooks, they do have a budgeting function. So at the top, and this is using the online version, but at the top of the little gearbox, there's a budgeting button. You click on it, and it will walk you through how to create a budget inside of QuickBooks. Similar to the exercise we went through, you're going to look at the different item from the chart of accounts and just say, hey, this is how much we're going to bring in. This is what we think the revenue and expenses will be by month. And you can also pull it in to say pre-filled data. It will pull the last 12 months. So I encourage you, if this is something that you're seriously interested in, so that on the profit and loss report, you can see how is our actual financial performance compared to budget. This is a helpful tool to be able to use within QuickBooks. And there are plenty of YouTube videos on how to create the budget and so forth, but you can use it. But all this to say, QuickBooks does have it fairly well built out in terms of being able to create a budget. I give you the picture of me. I do make it freely available that if there's anything that you would like to talk about, you're welcome to schedule a spot on my calendar, and happy to help. Budgeting's not hard. It really isn't. It's just a matter of taking the time to think through it and think about, hey, what do we think is going to happen? What do we think our revenue is going to be? What do we think our expenses are? And what is the financial impact if we decide to go out and spend $100,000 or add some more new nurses or add another provider? It's really about the discipline of the exercise that's more important than ending up with a budget and whether or not you hit the budget. It's forcing you to think strategically over the next year. What are the implications for decisions that we're looking to do? There are some other resources I wanted to share. We have the PMI conference coming up in January. We have plenty of other spreadsheets there. This is the same as before. We also have the new PMI Learning Center with some online calculators. And then we also have some information on succession planning that you may find helpful. I've got plenty of time. Any question that you may have? All right, so I have been, for the interest of people who are online, and the fact that I really can't hear that well, we're going to can we pass the mic?
If it works for you.
Yeah, that's fine. So I'm gonna pass the mic. I'm gonna play Phil Donahue. And if you don't know who that is, that tells us the age.
You do you, I guess.
All right, so what is your question, contestant number one?
My question is, I have nurse managers that purchase all the medical supplies, the vaccines and everything. They hire the nurses. There's no way for me to know what they're purchasing, so it's a surprise when I get the invoices. There's no budget for them to spend. What's the best way? Is that something other people, do they hold a budget for each department? They never had that before there, but it can vary, and
Okay.
they don't know any of the cost of anything they're buying or anything, so they're just buying stuff and everything. So it makes it difficult on my end, getting invoices that vary huge amounts.
So what she's asking about, are we going to take the budget and set spend limits for our employees? Let's think about this for a moment. I've got 35 new checkups next week, and I have no Prevnar in the refrigerator. What are you going to tell your nurse to do? Order more Prevnar. Okay. So practically speaking, the issue is not about, when it comes to the vaccine, it's really about effectively managing that inventory. Okay. That's the single largest expense that's really controllable. So I wouldn't worry about the vaccines as it relates to the budget, because it's really about, do we have the right internal control to make sure that if I have 10 Gardasil on Monday and 7 on Friday, did I bill 3? That to me is where the energy is. So I'm not worried about control spend limit. How many of you use Amazon for office supplies? It's not bad, okay? You can use some controls there. There's no good answer, because I can give you the consultant answer, or I can give you the answer of the CFO for a practice with 26 providers here in town. And the consultant answer is, yes, you must enforce a budget. It doesn't work.
It's not really the vaccines as much, it's more the medical supplies.
Right. So it's the medical supplies, the lab supplies, those kind of things. And when those invoices come in, again, there are no steadfast rules. And I know that's not the answer you were looking for. We have to rely on the people who have the authority to make those purchases are doing it appropriately. And your job as a leader to coach them and say, why'd you order 15 cartons of paper? And think about it that way. So I'm sorry I don't have a black and white answer. Yeah.
Thanks, Paulie. That was a
This is
great
going to
talk.
be a doozy. Let's hear it.
Well, no, it's not a doozy.
Okay.
Do you have any resources for helping us learn QuickBooks better? Like,
Okay.
we find it a little confusing, and our accountant hasn't been that helpful.
Okay. So is Debbie here? So Debbie is so for some of you who may not know this, I'm actually the CFO of Greenwood Pediatrics here in Denver, 26 providers with 3 locations. I've been doing that for about 6 years now. And Debbie is our outsourced bookkeeper, and she was here earlier today. So that's why I was asking if Debbie was here. So she wants to know about learning about QuickBooks. The best thing is within QuickBooks, they do have online tutorials. I don't think it's reasonable, in fact, I know it's not, to ask your accountant to teach you how to use QuickBooks. Okay, that's just not possible. So the best thing to do is within QuickBooks, they do have some editorial, and there are also YouTube videos. I mean, there are a lot of stuff out there, and I think that that's going to be more bang for your buck in learning and trial and error. That's how I learned it. You know, just trial and error and new features and videos and using it. So, yeah. That's the best use of time. All right. Contestant number 3.
Okay, I have a question. We're on the accrual basis. Is this all very different? Because I'm looking at this and I'm saying, oh no, I don't think I could do it quite that way.
So you're on accrual basis of accounting. Mm-hmm. How many in the room are on accrual basis of accounting? Exactly. So,
But it works.
real quick, there are a couple of things related to accrual basis of accounting. And I very conveniently skipped over this slide. All right, come on. There we go. I'm going to make a statement and you're going to find it odd. I wish everybody was on accrual basis of accounting. Because I want to know why. Because if you're bringing in $25 million a year in revenue, you have to go to accrual basis. It would be great if all y'all were at $25 million a year, right? Right?
That must be why we're on accrual.
Mm-hmm. Yeah. So let's look at vaccine. All right. The best way to explain accrual versus cash basis is look at your vaccine. You get them in August, and you pay the invoice, you put it on the credit card, let's just say December 1st. Okay? Under the cash basis of accounting, that is going to be a November expense, right? We bought it, it came in August, we put it on the credit card in November, it's a November expense under cash basis of accounting. Under the accrual basis of accounting, anyone want to guess what month it is that it is expensed on your book? Yes and no. Under the accrual basis of accounting, it is expensed when the vaccine is given to the patient. It is overly burdensome on an independent pediatric practice. I get 1,000 units of flu vaccines August the 1st, and it's not an August expense, it's not a November expense, it's spent as it's given to the child. And that's what makes it so miserable.
Well, we're vaccines for children, so I don't have to worry about vaccine expenses, so it's a little easier.
So with that, you also have your payroll expenses. So it's going to be based on the payroll period, not necessarily the deposit date. And so I think it's going to be a little bit academic because so few people here are on accrual basis, but it is something to keep in mind. The cash basis of accounting is much simpler. And, you know, it's when the revenue comes in and when the expense is paid. The other main difference under accrual basis is the revenue is tied to your charges minus your adjustment, not what is deposited into the bank. And that can make it a little screwy to play with, managing that cash flow versus charges. So it gets a little bit out of whack.
So my question about QuickBooks, I really like your chart of accounts, but I'm using my chart of accounts for 10 years now. So I like your chart of accounts, how they categorize them, the names, also that makes sense for budgeting and how you run your way to do it. But my own chart of accounts in my QuickBooks are 10 years old. Would you suggest me to transition to yours or just do yours like a spreadsheet separately?
So he brought up something that I was trying to avoid, and apparently I didn't do it with 10 minutes later. Sometimes your chart of account, it was set up when they set up QuickBooks initially, okay? To transition to those buckets or those categories is a big change within QuickBooks. In my experience, depending on where you were and where you want to go to, I have no shame in just starting over. I get a second set of books within QuickBooks with the new chart of accounts, and I start fresh going forward. Now, depending on how yours is currently set up, I may be able to add some subcategories. So I was looking at a practice last night. I was reviewing their financial, and it just said payroll expense. Well, I can go in and add administration, billing, provider. You may be able to work with what you have to bring that granularity without swinging for the fences on something perfect. So it's really going to depend. You can always add more granularity to what you have. That I would definitely look at that before you think, oh, I gotta go. But if worse comes to worse, just start with another set of books. It comes with complications or things that you have to work with. But I've done that at least a couple times a year. I have a practice that's doing that. You're like, this is so far gone. I saw one practice where underneath it wasn't vaccine expense. It said Rototec, Gardasil, Prevnar, and it was just kind of weird. I mean, everything was just really out of whack. And my recommendation to them was just start fresh. So you may be able to go in and pop in a few to bring that granularity of what you want to track. It really depends on the situation. So, yeah.
So I'm in a very different situation. We were very small, but I've done my bookkeeping myself for 25 years, so I have a very good idea where my expenses are and all that. What I cannot predict is income. And the last 4 years have been a wild ride. Just COVID shutdowns and then RSV in the middle of the summer. So my major problem is I cannot predict how many visits per day we will have. Do you have any handle on that?
So with regard to predicting the number of visits per day, I would rather guess with some good information than not at least make an attempt. It's better than nothing. And that's the worst answer I could possibly give, but that's the truth. What are your alternatives? Do I just not guess? I'll at least have some data to help make that informed decision. There's no way to predict that in January or February this month that we're going to see a plummet in sick visits. But what doing a budget can do, based on the data that you have, is come March you say, look, we were expecting 1,000 more visits so far this year. We may need to trim expectations for the end of the year. So although it's not perfect, I would rather have a good faith estimate based on the data than nothing at all. So, yeah.
Similar question, probably similar answer, but I figure I'd ask. As a new startup, trying to build a budget and going back to not knowing how many patients you're going to see, or for a growing practice that's maybe adding a provider, you know, when you're stable and you're like, oh yeah, my providers average 20 patients a day, you can build it in, we're not growing, we're not shrinking. But for growing practices, is there any magic calculation that you have to say, this many new patients per month would equal this many visits over the year or anything like that?
So as you're ramping up in a new practice, it is very hard to predict. And like I said, the budget is a story. MGMA survey, does that ring a bell? All right. One of the things that I think about is, what am I going to do with that information? Let's say that my revenue per encounter is $10 less than yours. I think it's more about continuous self-improvement than it is about how I'm doing versus you, right? So that's why KPIs, or key performance indicators, are important. I'm not a big fan of comparing how much did I spend on vaccines versus him, because it's apples and oranges. How much did I spend on, clinical staff versus him? It could be useful, but it really doesn't tell me a story. It's more important for me to track it over time and know, hey, did my revenue increase or decrease, and did those expenses go up in proportion? And, vaccines are what they are, right? If you've got good if you have good vaccine management, I don't care if my vaccine expense went up 45%, as long as I'm getting paid. But, it doesn't really tell me much. And it's really important. So what I'm trying to drill home is, those metrics should be. I'm not a big fan of looking at outside sources. How does my percent of medical supply compare to another practice? It's almost a fool's errand. Now I can look at a set of numbers and say, "Ooh, that looks pretty high," and then we'll dive into it. But it's really about spending the least amount of money possible and bringing in the most amount of revenue, and how you doing compared to your own self. The self-improvement should be where the emphasis is. Any other questions? Okay. I'll be around the rest of the week. If you have any questions, please let me know. And we do have a couple minutes left. I'll be around, but yeah, happy to chat. Thank you, guys.